Hi there, and welcome to In the Know. I'm Keisha, and I'll be answering some of your most pressing real estate questions in less than 2 minutes. So, start the clock. Today's question is, what is PMI, also known as private mortgage insurance? Simply stated, PMI is the lender's insurance that they take out to protect themselves when a borrower is purchasing a home and borrowing money with little money down. So whenever you put down less than 20%, private mortgage insurance or PMI will be included as part of the payment that you're making monthly. Now, the good news is with private mortgage insurance or PMI, once you have 20% equity in your home, you can request that the private mortgage insurance be canceled. It's automatically canceled once you paid your balance down to 78% or have 22% equity in your home. So that's how it works. And PMI is attached to conventional loans. So whenever you're in a position to purchase a home and you're putting down less than 20%, just know that the PMI will be there. Programs like FHA also have their version of mortgage insurance as well. It works slightly differently, but the concept is still the same. And just so you know, mortgage insurance is very common. According to Lodestar in 2018, 68% of all buyers put down less than 20% when they purchase their homes. And to take it a step further, 43% put down less than 5%. So mortgage insurance is very common. It's something that buyers are experiencing all the time. It's nothing to be afraid of. It essentially helps you get in your home with the lower down payments. So don't be afraid of it. Embrace it. Go out and buy yourself a house.